Good morning. This is Megan Horneman, the Chief Investment Officer from Verdence Capital Advisors, and we're coming to you today to discuss some of the economic data we received this morning, primarily on inflation. This has been the monthly inflation report that most people have been waiting for because it's a day before the Federal Reserve meets, and we're trying to see what the Fed's going to do, if they're going to pause or if they're going to raise rates again. Fortunately, the report came in pretty much as expected, so there were no big surprises. The core reading on an annual basis, which excludes a lot of the volatile items like energy and food, it came in a little bit hotter than expected, but it was primarily driven by a rise in used car prices. And there are some nuances around the reporting of that. And when we look underneath the details for used cars, we're seeing that inventories are rising. So we don't think that this is sustainable. The other parts of the report that the Fed's going to be looking at are things like housing, the service sector. These things are still pretty stubborn, and that's going to probably keep the Fed tomorrow with delivering a pause. We do think the report allows them to not hike rates again after the 500 plus basis points of rates that we've seen. They'll probably just hold off on tomorrow's meeting, but they're going to deliver their statement with a very hawkish tone because these stubborn parts of inflation, so the housing prices, the wages, the service sector, these things they're what we call sticky inflation, much harder to get rid of. So the Fed is not done. We don't think that they have any room right now or this year to cut rates like the market may be looking for. So unfortunately, we're dealing with yields that are higher for longer. The headlines you guys are going to see, it will be that inflation was softer. It's true. Inflation is going in the right direction. We just aren't completely out of the woods yet. We need to see some improvement in some of those stickier areas, and the Fed will highlight that most likely in the meeting tomorrow. And that's all that I have for today. If you have any thoughts, comments, ideas about podcasts, please feel free to reach out at podcasts@verdence.com. Thank you again.